Welcome to the News Hut Media. Today we dive into a fascinating and very important story. Why the prices of gold and silver are soaring, what's behind the demand-supply squeeze, what central banks are doing, and where the market may head next. Whether you are an investor, saver, or just curious, this one's for you. What's happening now? The price surge. Gold has recently hit historic highs. For example, spot gold rose above Rs 4,200 per ounce this month. Silver is also rallying hard, and in some markets is near a 14-year peak. The general theme is, in uncertain global economic, monetary and geopolitical times, precious metals are gaining as safe havens. So what's driving this? Let's break down the main forces behind this move. Demand side, who's buying and why? Central banks. Yes, central banks have been massive buyers of gold. For example, official plus estimated unreported purchases put gold bought by central banks in the 12 months leading to June 2025 at 800 tons. The rationale? Diversification away from the US dollar, hedging inflation monetary risk, geopolitical worries. Our 2025 outlook suggests central bank demand will remain strong, though growth might moderate from the very peak. Retail, ETFs, investment demand. With interest rates high or uncertain, inflation worrying people, gold and silver become attractive for wealth preservation. Silver has an industrial demand angle too, solar panels, electronics, which adds a layer of complexity. Supply side and market dynamics. On the supply front, new mining production growth is modest. For gold, supply growth in 2025 is projected at only about 1% above 2024. For silver, supply deficits are expected. For example, HSBC estimates a silver supply shortfall of about 206 million ounces in 2025. Specific supply bottlenecks. For example, London silver market saw a squeeze due to large shipments from the US and China, low inventories in certain vaults. Key drivers and underlying factors. Weaker US dollar, since gold and silver are priced in USD, a weaker dollar tends to boost them. Monetary policy, interest rates. Lower real yields mean more attractive non-yielding assets like gold. Geopolitical and macroeconomic uncertainty. Safe haven demand rises when global risk increases. Industrial demand, especially for silver. Silver's use in solar and electronics adds extra demand pressure. Forecasts, what to expect ahead. Many major banks and analysts are bullish and raised its gold price forecast for 2026 to about Rs 5,000 per ounce and silver to rise up to Rs 70 per ounce. For silver, HSBC raised its average price forecast for next 2 years, citing strong safe haven demand and supply constraints. If central bank purchases continue at high levels, each additional 100 tons of gold buying could raise the price by about 1.7%. In short, the structural backdrop supports higher prices. But that doesn't mean straight line. We have to watch the risks too. Risks and things to watch. If inflation cools or the Fed keeps raising rates, making safe havens less attractive could mute the rally. Equities or other assets becoming more attractive, drawing money away from metals. Supply surprises. Example, large secondary market sales, recycling, or new mining could increase supply. Overheating or timing risk. High valuations mean potential corrections. Implications for Indian investors. Gold is culturally important here. Demand may stay strong during festivals and weddings. Silver too. Industrial demand globally might affect domestic price movements. If you hold or are thinking of buying, treat it as a part of your portfolio strategy, not just speculation. Consider your goals, short-term versus long-term, use in jewelry versus investment metal. And always monitor global trends, dollar strength, inflation data, central bank moves. Conclusion and takeaway. Gold and silver are in a strong uptrend propelled by central bank buying, investment demand, weak dollar, supply constraints. Forecasts suggest higher levels ahead, gold towards 5,000 per ounce, both silver and $70+, which continues to be an important point of focus for us. But no asset is risk-free, stay informed. If you decide to invest, think of it as a protection plus diversification, not just chasing the next shiny number. If you found this breakdown useful, please hit like, subscribe and share this video. Thanks for watching.